Hello everybody, my name is Christian Charlotte. Welcome to our market report. Today we're Thursday, January 31st. Today folks, I want to talk to you about a market correction that we expect. We expect markets to correct in the range of 3 to 5% approximately, simply because when we look at the SPY here, look at it in the graph, look at it here on the graph, it's actually totally overbought. So that's a sign that investors at this price is saying, you know what, let me cash in, let me take some profit. Also, all the bullish sectors that were in the American markets are starting to become neutral. So that's a sign that we're lacking the upward momentum. So a correction is eventually going to come on the market. So that's why here we expect the next target for the SPY will be at around 147.28. For the TSX, the correction has already started. It has been led by the resources sector, mostly the gold sector, which continues to go down. So at this price here, are you going to short the gold sector? No, the moment to short was actually over there at around 288.67. Actually, when you look at the technical situation of the gold sector, you see that there's an important support over there that has been tested many times in 2009 and 2012, and now we're heading towards that support here on the gold sector. So we think that those of you who would like to acquire some gold stocks, the time has not come yet. There's still some room to go on the downside. Look at a stock like Kinross Gold. The stock continues to maintain its downward momentum, continues to go down. So the next support will be at around 753. So far, the downward momentum is taking the lead. So with this, a market correction is expected with sectors that are becoming neutral, bullish sectors that are becoming neutral. With the overbought situation on all index, a correction is expected. But what we try to look at today is in February, what happened usually for the last 30 years? What sectors outperform or what sectors underperform? So I'm going to take a look at this with you right now. So for instance, the automobile sector. This sector tends to outperform in February. Why? Because the markets expect that during the spring, people are going to be in a buying spree to buy automobiles. So this sector, even if it's having a correction, it's worth to watch to buy some stocks at a bottom. You see this correction here? It continues to go down. We have a lot of stocks like General Motors, that you could buy at a bargain. Look, the stock continues to go down. What I would like to see to determine, okay, that's going to be an entry point, is to see if ever the stock can stabilize around that support there, and whenever it reverses that downward trend, I'll get in. So at around 28.40 on General Motors, and you just put your stop loss at 27.56. That's usually at the end of February that those stocks tend to outperform because the market expects those automakers to do good. Ford, also same technical situation. It's actually testing its upward trend here. It's a correction, but you see, I expect Ford maybe to, if ever Ford can stabilize around this area and break a resistance at 13.21, I'll give it a shot on Ford, and that's your profit opportunity at 14.25, so 10%, and your stop loss should be at around 12.62 on the reversal of that upward trend. So automakers are really sectors to watch. Usually at the end of February, for the last 30 years, this sector has performed pretty well. Multi-utilities, it's a sector that underperformed. Right now, the technical situation of the utility sector has been really bullish. The sector has been going up for days. Right now, it's on the verge of testing an all-time high. This year high, I mean, of 2012. So this is a sign that, okay, you know what, there's no problem. This sector continues to go up, but eventually we're going to have a correction in that sector. If you take a look at this on a yearly basis, you see that this sector is actually totally overbought in the stochastic 933. So that's a sign. And whenever we tested that zone here, around this area, we had a correction. Around this area also, a little bit lower it was, we had a correction. Around this area, we also had a correction. So that's a sign that even if the utility sector is going up, we're going to have a correction. So that will be a sign to acquire some positions on the utility sector whenever they go down. Is it a time to short right now the utility sector? Well, I'm not sure though, because if ever you're going to short those stocks, always look if those stocks pay dividends and look when they are going to pay dividends, because you could get caught in this stuff, in the dividend and those dividend paying stocks. So Duke Energy is doing the same technical situation as the multi-utilities. It's on the verge of testing that resistance. It could be an interesting point to short, but if you short it here, look at when the stock pays dividend. Avista Energy, same scenario, continues to maintain its upward trend on the verge of testing that resistance at 26.35, but look at if that stock can pay some dividend and to not short it when it does pay that dividend. So this is something that you need to watch because the utility sector tend to underperform during the month of February. So that's it, folks. See you next week for our market report. We expect a market correction. This is bad news for those of you who acquired at the top, but this is good news for those of you who are patient enough and are looking to acquire some positions at a lower price. So see you next week.